Buying a home is one of the biggest financial decisions you'll ever make. But with home prices, mortgage rates, and rent costs constantly changing, many beginners are left asking, should I buy a home or should I keep renting? Today, we're breaking down the real math behind buying versus renting in a simple way that any beginner can understand. This is not financial advice, just education to help you make smarter decisions with your money. Let's get into it. 1. What most beginners get wrong. A lot of people say things like, renting is throwing money away. Buying is always better. If you own a home, you're guaranteed to get rich. But none of these statements are always true. In reality, buying and renting both have financial pros and cons. Your decision should be based on math, not pressure from society, family, or TikTok. 2. The real costs of buying. When beginners calculate the cost of buying a home, they usually look at just one thing, the monthly mortgage payment. But that's only the beginning. Here's what buying really costs. 1. Down payment. Usually 3 to 20% of the home price. On a $300,000 home, even 10% down is $30,000. 2. Closing costs. These include inspections, lender fees, insurance, and taxes, typically 2 to 5% of the home price. Property taxes. Often $2,000 to $7,000 plus per year, depending on your location. 4. Homeowners insurance. Usually $1,000 to $2,500 per year. 5. Maintenance and repairs. A common rule: expect to spend 1% of the home's value every year on maintenance. On a $300,000 home, that's about $3,000 per year. 6. Interest on the mortgage. With higher mortgage rates, interest can double or triple the cost of a home over time. So no, buying isn't just paying your mortgage. There are a lot of hidden expenses beginners forget about. 3. The real costs of renting. Renting seems simple. You pay one fixed amount every month. But here are the actual financial realities of renting. 1. Your rent can increase every year. Most landlords raise rent 3 to 10% annually. 2. No equity building. You don't get any ownership or asset growth. 3. No tax benefits. Homeowners get deductions, renters don't. 4. You have fewer responsibilities. This is a good thing. No property taxes, no maintenance, no roof repairs, no water heater replacements. Renting buys you flexibility and low responsibility, not asset growth. So renting isn't throwing money away. It's paying for simplicity and mobility. 4. When buying makes more financial sense. Buying usually makes more sense when you plan to stay in the home for 5+ years. Because buying has upfront costs, the longer you stay, the more time you have to build equity and spread out those expenses. You have a stable job and emergency savings. Homes come with surprise costs. You'll need cash ready for repairs and unexpected bills. You can comfortably afford the monthly payment. If you're stretching yourself just to buy, it's probably too early. The local housing market is reasonable. Some markets are so overpriced that renting is far cheaper. You want control over your space. You can renovate, build equity, and avoid rent increases. 5. When renting makes more financial sense. Renting is usually smarter when you plan to move within 1 to 3 years. Short-term ownership is expensive because of closing costs. You're saving for a down payment. Renting can help you build cash without overcommitting. Monthly rent is significantly cheaper than a mortgage. In some cities, renting is half the cost of owning. You want financial flexibility. No big repairs, no property taxes, no maintenance budget. You're still building your income. Buying too early can limit your ability to invest, save, or take career risks. 6. The buy versus rent equation. Here's a super simple rule to help you. If your yearly rent is less than 5% of the home's price, renting is usually cheaper. Example, if a $300,000 home rents for under $1,250 a month, renting wins. If your yearly rent is more than 7% of the home's price, buying is usually cheaper. Example, if the same home rents for $2,000 per month or more, buying might be better. This rule isn't perfect, but it's a great starting point for beginners. 7. The big question: what builds more wealth? Historically, buying a home builds wealth slowly and steadily, mostly because you're forced to pay off a mortgage and build equity. Renting doesn't build equity, but it frees up money you can invest elsewhere, sometimes earning better returns. So the real wealth-building method is simple. Buy when you're financially ready. Rent while you prepare. There's no wrong choice, just the choice that fits your situation. 8. Final takeaway. So should you rent or buy? It depends on your timeline, your cash, your job stability, and your goals. Buying isn't always better. Renting isn't always cheaper. But with the right math, you can make a smart decision. If this helped, hit the like and subscribe button below. Thanks for watching.